Welcome to Addicted to Real Estate TV. Today's episode is called Put All Your Eggs in One Basket. Stick around, I got some good information for you.
To say you gotta know somebody, or know somebody to get somewhere these days. To say you know that's alright, yeah that's alright. Cause you know that's alright with me. Yeah, you know that's alright, yeah that's alright. Cause you know that's alright.
Hi, I'm Phil Falcone, your host of Addicted to Real Estate TV. Today's episode was sponsored by Realty Mark 100, where real estate agents receive 100% commission for only $100 a month. You can check them out at the website below or the phone number below. Okay, so today I want to talk about put all your eggs in one basket. Has anybody out there ever been given advice from a financial advisor? Usually the first thing that they tell you is, don't put all your eggs in one basket. I've had all my eggs in one basket my whole life. So I get a kick out of that advice. Usually what I do with these people is I argue with them, like I do with almost anybody that I meet. So I tell them, oh, well, first of all, I happen to be an expert in real estate, okay? I'm addicted to real estate, right? I mean, this is what I've been doing my whole life. So why wouldn't I put my money in something that I'm an expert at? It makes perfectly logical sense to me. I mean, if you're a stock market expert, you've been analyzing stocks your whole life, that's probably where you should put your money. You obviously know it well. I mean, you can make the argument that real estate's better, but that's a TV show for another day. If you're an expert in something, that's where I'm going to put my money. Of course I'm going to, okay? What if you're not an expert, but you're just interested in real estate? Well, that makes perfect sense to me, too. I mean, if you're interested in something, then you're going to educate yourself thoroughly on it. You're going to talk to other people. You're going to associate with other people who are in that business. You're going to go to real estate meetings. You're going to read books. You're going to watch TV shows like this one. Because you're interested in something, that alone is going to make you better at real estate investing if you're interested in the topic. So it's a perfectly good reason, in my opinion, to put all your eggs in one basket. You know, if you know this business, okay, like I know this business, or you're trying to know this business like I know this business, I mean, it makes perfect sense. That's where I put my money. So I don't diversify anything, okay? If every single dollar that I have, you could say is in bricks, or you could say some of it's in 2x4s and some of it's in ceiling tiles, drywall, basically everything's in real estate. You know, people say, well, Phil, you don't have a lot of diversification. I say, well, that's true. I don't have diversification in other fields, but I do have my real estate diversified. Well, what's that mean? I get some of the money in 123 Oak Lane. I get some of the money in 57 Maple Street. So it is diversified a little bit in a bunch of different addresses. You know, the point to all this is, why do these investors tell you, or these financial advisors, why do they tell you that you should put all your eggs, you shouldn't put all your eggs in one basket? Well, because they're afraid that when the real estate market, for example, were to collapse, if you were invested fully in real estate, 100% like me, when the market goes down, what do you do with your money? Well, I'll tell you exactly what to do with it. What I did when the market started to collapse in 2006, 2007, 2008, I sold many millions of dollars worth of buildings. But I didn't want to take the cash, because what would that do? That creates a taxable situation. Now I have this windfall of all this cash coming in, and the government comes in and takes a nice big chunk of it. Well, I don't want to let that happen. So what I did was I 1031'd my residential buildings into commercial buildings. Now, you're probably saying to yourself, well, how does that change things, Phil? Residential real estate goes down, commercial real estate goes down. Wrong. They might go down when the market goes down, but there's a big, big difference between them. Residential real estate is primarily valued on what the comps in a neighborhood are selling for. So no matter if your house is really nice, if your house isn't so nice, it's tied to the comps with some adjustments for the different things that your house might have. But commercial real estate doesn't work like that. Commercial real estate is primarily valued on how much rent money it makes. It is valued to comps to a certain extent, but a much lesser extent. Most appraisers might use a number like 20% is tied to comps, but 80% is tied to an income approach And the income approach is how much money does this building make? Because the investor who's buying a commercial piece of real estate, he's not buying it to live in it. He's buying it because it makes money. All right? So he's looking at the rent roll. He's basically buying the rent roll. So why does that matter? Here's why it matters. Because if you are a great landlord, if you are addicted to real estate, if you are interested in real estate, if you're focused on what you're doing, you're going to kick ass with that building, okay? Every building that I've ever owned, I like to think I'm always getting the top dollar rents that anyone's getting on that street. I fix up my buildings. Why? I care about them. I like them. I love real estate. I want to improve my real estate. I want to attract a better quality of people, okay? I do what's necessary, whether it's marketing or advertising or spending money or barter techniques. There are a million different things that a good landlord can do. I'm willing to go that extra mile to make every one of my buildings succeed, especially the commercial ones, because those are the ones I got the most bucks in. Okay, they get the most attention. Why? Because they cost millions of dollars, big commercial buildings. So what am I going to do? Am I going to just forget about $1 million investment? Of course I'm not going to. Okay, I'm going to put every ounce of energy I can into making sure that that place kicks ass. All right? So why does that matter? Even when the comps are going down on commercial real estate, like they have in the last 5 years, my buildings have maintained a strong value. Why? Because I keep them rented. I keep the machine moving along. It's taken a great deal of my attention to make sure that my commercial buildings survive. I'm not saying it's easy, it's hard work. Last 5 years, I busted my butt to keep my commercial buildings chugging along. And even though my rents have gone down somewhat, I mean, that was a decision that we made as a company. We said, I'd rather lower the rents and keep the building filled with people than have a bunch of vacancies and be holding out for that high dollar tenant. I'd rather keep the machine moving. So that's the kind of thing that I do. And when your money's in commercial real estate, you have a better options. You have more control. You have more options of different things that you can do to keep the value of your building successful. Where in residential, you don't necessarily have that. So that's why when the market is going south, and when you see a decline coming, I typically convert my residential holdings into commercial. I'm one of very few people who do that. I don't know of any other guru or any other investor, per se, who's actually done that, who's converted things strictly for the purpose of maintaining their own portfolio value. And I happen to think it's a wonderful idea, so that's why I wanted to share it with you today. Hey, I want to tell you about some of the things that are going on. My buyer's briefcase. A lot of people have been asking me, when's it coming? When's it coming? Man, it's coming. It'll be coming next month in September. End of story. It's coming. Cross my heart and hope to die. You will have it in September, okay? So make sure you put your name and email address in on my website, addictedtorealestate.com, and sign up for this web TV show so you can find out when the buyer's briefcase is officially released. And you can also find out about some of the big events I got coming up. In September, October, November, December, I'm going to have a lot of public speaking events, a lot of great real estate meetings where I'm going to be sharing with people all of my ideas, my philosophies. You can come out and pick up a signed copy of my book, Addicted to Real Estate, Why I Can't Stop and Why You Should Start. And if you haven't picked up a copy of this book, come on, man. Are you really interested in real estate? This book is 20 years of experience, okay? More than 20 years. It's going to be 24 years in November. And it costs $20. That's less than $1 a year. You can't invest $1 a year in your education? Come on, people. Pick up a copy of it. Addicted to Real Estate is my book. Make sure you sign up for my web TV show. Make sure you keep watching these episodes because I got a lot of exciting things coming. I'm Phil Falcone from Addicted to Real Estate, and thanks for watching today's show.